Let's have this conversation. If you could each introduce yourselves, tell me who you are, what you do, and what kind of predictions do you see when we talk about the GDP and economic growth? What's your perspective?
Sure, absolutely. Hello, my name is Dana Peterson. I'm a global economist at Citi. And I think the one number that's really fascinating, especially for the US, is that if we close the gender wage gap, meaning if we just paid women the median male wage, we would add an additional $100 billion per year. That's a lot of GDP growth, a lot of consumption that can be implemented into the economy, and certainly help us to find growth amid an environment where we're seeing slower global growth.
Kiersten, Barnet, I manage Bloomberg's Gender Equality Index, and I think to the numbers you both cited, the investor community has the opportunity and probably responsibility to play a huge role here. But one of the reasons we built this index at Bloomberg is because there historically has been a lack of reliable data in this space, and so really we're all just kind of guessing at progress until we have some more standardized comparable data.
I'm Tina Fordham. I'm Citi's Chief Global Political Analyst, which means in my day job I spend a lot of time thinking about elections, Brexit, Trump, China trade. What has all of that got to do with gender economics? Well, actually, if governments do more to just remove barriers to entry for women to enter the labor force at higher levels, we will start to get to some of the GDP numbers, adding as much as 6 percentage points globally on a realistic basis by reducing the gender gap. And this in a time when one of the #1 risks for investors is a slowdown in global growth.
Kiersten, you measure at Bloomberg, and I would love to know how the GEI was, created, what the aha moment was around creating it, and also what does it measure?
So the GEI, so Mike Bloomberg a few years ago came back from some client meetings and said, I keep hearing about ESG data, and our clients are increasingly incorporating it into their investment analysis. Feels like it's being mainstream. What is our offering there? When you go to the terminal, which I imagine most people in this room are familiar with, the E and the G were much more flushed out. When you look at our social data offering, it was pretty much limited to women on boards. I think the reason there was such a lack of data is there also hadn't been a standardized disclosure framework like a SASB to tell companies how to measure and what to measure so that they could feel comfortable saying, we all have work to do, and not worry that if I measured senior women one way, you're going to come out and measured a different way and I'm going to look bad. So we created a standardized disclosure framework, and the first year we did it, Citi was a pilot, and Citi was one of the companies that came forward and said, we're going to be transparent, both about the data that we're proud of, but also around the things that we're working on, which is what true transparency means. And I think we had 25 countries report data. And I was just telling these women backstage that this year we had 400 companies submit data. So I think that just seeing that every company has work to do, not one of the companies that report has the same amount of women at the top as the bottom. They all have raw pay gaps. They're all struggling in different areas. But I think for companies, knowing what to measure and how to measure it is really important, because that then can help you highlight where your weak points are and build targeted solutions, hold people accountable, measure progress. And then for investors, they now have access to standardized comparable data, and so we don't need to be making decisions just based off of women on boards.
One of the areas where the needle has moved is it has gone from being a reputational risk to disclose this data to being a reputational risk to not disclosing it. And that has happened in the last 2 or 3 years, right? And if you look at what the United Nations does with collecting data as well, the IMF, which has a huge amount of work, they struggled to get countries to disclose this data. Companies haven't wanted to either, which is why until very recently, until we had this shift in mentality about where the reputational risk was, we as analysts couldn't do the work, and you couldn't put together the kinds of instruments that investors need to be able to understand the opportunity. So that has been a real watershed in this whole debate.
We see that there's only, less than 5% of women are CEOs in Fortune 500 companies still today. So what are some key solutions that are low-hanging fruit? What are some key factors that we can implement pretty quickly that could go a long way?
There are kind of three things here about this conversation. The first is collecting metrics. The second is analyzing those metrics, and then you can actually produce initiatives. And this is where your work is incredibly important in terms of collecting those metrics. And then the key thing is making sure that businesses and governments feel comfortable with the analysis and making public these metrics. Because unless you know what the problem is, it's very difficult to solve those problems. If we just paid women the same amount that you're paying men for the same exact job, you could create an incredible amount of GDP, and that's something that's just so very simple to do.
Some of these new laws that are being passed in different states will go a long way, I think, to helping equalize equal pay for equal work.
Yes, and along those lines, we often don't think about the length of time that women work. Oftentimes women are called upon to step out of the labor force to take care of children, to take care of parents, and then they're penalized when they're 65 when it's time to retire, because our laws, our Social Security laws, are basically determined by how many years you work. And so these are things that we can change very simply, where we could look at the measure of your work, or even how much earnings you are making, in order to make sure that women are not being disenfranchised for taking those breaks from labor.
That just getting companies to measure is so important in addition to the policy side. Because I think once they measure it and they see things that make them uncomfortable, then they're more apt to fix it.
We saw this in the UK. The UK has really been at the forefront, actually, of some national policy initiatives collecting data on the gender pay gap. And at Citi, when we did it in the UK, we then did it across our other countries where we work. And that served as a kind of an engine for a review across the board. So yes, governments can mandate that companies should collect this data, and then companies, do seem to take it upon themselves to address these kinds of issues.
Gender equality is not a female issue, it's a social and economic issue. And I think that is the point of this conversation for all of us in this room. It is, how do we get more money in all of our pockets so we can spend more and make a big difference?
I think it's important for investors to think of women as an asset class. So here's an example. Currently, women spend $32 trillion, I'm not saying billion, $1 trillion a year. That's an incredible amount of spending. And what's interesting is that when we look at who's spending, the US is the top spender. But emerging markets as a whole have already overtaken advanced economies when it comes to spending. And over the next 10 years, China and India are going to double the amount of spending, women spending. So there are tremendous opportunities here for investment, looking at women as this giant asset class.
What are some solutions that we can take, immediate action steps, or what you would love to see all of us do?
I think that as investors, sort of demanding more transparency from public companies is a great place to start, because when your shareholders care about something, you suddenly care about it. So that would be mine, because I just would love to see a lot more data out there to help us build more targeted solutions. More
mentoring, and not just woman to woman, but talking about lifestyle issues has been a revelation for me.
Retention, because if you think about it, every time someone leaves, there's a cost involved, right? The cost of finding a new person, training that new person. And so if you can make it easier for especially women to remain your star players and to stay in the workforce by making these highly simplistic decisions, then we will see much greater productivity, faster GDP growth. And I think that's where I, as an economist, can come in, where we can take the discussion and help bridge the gap to help investors and businesses and governments see the benefits of thinking of women as an asset class.